Hello everyone, and welcome back. If you are 65 or older, on Social Security, SSI, or SSDI, this is one of those updates you do not want to ignore. We are now moving deeper into the 2026 tax season, and there are a few critical forms and rule changes that could directly affect your refund, your deductions, and in some cases, the timing of your payments. This is not about panic. It is about preparation. Because the seniors who stay organized this month are the ones who avoid delays and keep more of their hard-earned income. Over the last few weeks, there has been a lot of confusion about new tax deductions, benefit adjustments, and reporting requirements. Many of these updates connect directly to information issued by the Social Security Administration and the Internal Revenue Service. If those names sound intimidating, do not worry. Today, we are going to translate everything into plain, simple English, so you know exactly what to look for and what to file. Let's start with the single most important document for millions of retirees, your SSA-1099. This form comes from the Social Security Administration and shows the total amount of benefits you received last year. Even if you believe your Social Security income is not taxable, this form is still essential. Why? Because it is the official record of your income. The IRS uses it to match what you report on your tax return. If the numbers do not match, your return can be flagged for review, and that can delay refunds for weeks or even months. If you have not seen your SSA-1099 yet, check your mailbox carefully. It usually arrives by the end of January or early February. If it is missing, you can download it directly from your online Social Security account. It takes only a few minutes, and having a digital copy stored safely can prevent major stress later. Now let's talk about the form many seniors overlook, Form 1040 Senior. This is the senior-friendly version of the standard 1040 tax return. It has larger print and a layout designed specifically for taxpayers aged 65 and older. One small checkbox on that form confirms that you qualify for the higher standard deduction available to seniors. If that box is not checked, the system may calculate your taxes incorrectly. It sounds simple, but thousands of returns every year miss this detail. There has also been a lot of discussion about enhanced deductions for seniors in 2026. While deductions do not mean a check in your mailbox, they do reduce the amount of income the IRS considers taxable. For many low to middle-income retirees, this could significantly lower or even eliminate federal income tax liability. However, these deductions phase out at higher income levels, so it is important to review your total income carefully, including pensions, part-time work, investment withdrawals, and Social Security. Another area causing confusion this year is Medicare premium deductions. For most retirees, Medicare Part B premiums are automatically deducted from Social Security payments before the money reaches your bank account. That means the amount you see deposited is already reduced. When you compare your benefit statement to your bank deposit, the numbers may look different. This is normal, but it is important to understand it when filing your return. If you notice that your monthly payment did not increase as much as expected after the 2026 cost of living adjustment, Medicare premium increases may be the reason. Some seniors may qualify for Medicare savings programs depending on income and state guidelines. These programs can help cover Part B premiums. If approved, that could increase the amount deposited into your account each month. Eligibility varies by state, so it is worth checking with your local benefits office. Now let's address SSI and SSDI recipients. If you receive supplemental security income or Social Security disability insurance, your reporting requirements can differ slightly. SSI benefits are generally not taxable at the federal level, but you may still receive statements that verify your benefit amounts. Keep these documents in a safe folder for at least 3 years. Even if they are not required for federal taxes, they are often required when applying for housing assistance, energy programs, or state relief grants. Speaking of energy assistance, many seniors are eligible for seasonal heating or cooling assistance programs. These are often administered at the state level. While these programs are separate from federal tax filing, your reported income on your tax return can impact eligibility. That is another reason accuracy matters. A simple reporting mistake can unintentionally affect other benefits. Now let's talk about deadlines. The standard federal tax filing deadline usually falls in mid-April unless extended. Filing early can reduce the risk of identity theft tax fraud, which unfortunately targets seniors at higher rates. Scammers often attempt to file fraudulent returns using stolen Social Security numbers. If you file early, you reduce that window of vulnerability. If preparing taxes feels overwhelming, you are not alone. Fortunately, there are two major free tax assistance programs supported through grants overseen by the Internal Revenue Service. The first is Volunteer Income Tax Assistance, commonly known as VITA. This program helps individuals who meet certain income thresholds and provides certified volunteers who prepare returns at no cost. The second is Tax Counseling for the Elderly, or TCE. This program focuses specifically on taxpayers aged 60 and older and is trained to address retirement income, pensions, and Social Security taxation. These services are available at community centers, libraries, and local non-profit organizations. One very important warning: avoid paying large fees at commercial tax prep offices, unless your situation is highly complex. For many retirees with Social Security and modest additional income, free programs can handle everything needed. Keeping that extra $300 or $400 in your pocket can make a meaningful difference on a fixed income. Another point to consider in 2026 is state-level tax relief. Some states offer property tax exemptions or freezes for seniors over a certain age. These are not automatic. You typically must file a simple application with your county tax assessor. Missing that application could mean paying hundreds or even thousands more than necessary over the year. Check your property tax statement for words like homestead exemption, senior exemption, or tax freeze. If you do not see them and believe you qualify, contact your local office directly. As we bring everything together, here is a simple action plan for this week. First, locate or download your SSA-1099 from the Social Security Administration. Second, confirm whether you will use Form 1040 Senior and ensure the age 65 or older box is checked. Third, review your Medicare premium deductions so you understand any differences between your gross and net benefit amounts. Fourth, schedule a free tax preparation appointment if you prefer in-person assistance. And finally, review your property tax statement to see if you qualify for any senior exemptions. Staying organized may not feel exciting, but it is one of the most powerful financial tools you have. On a fixed income, small mistakes can create unnecessary stress, but small proactive steps can protect your peace of mind. Remember, these benefits and deductions are not charity. They are part of the system you contributed to throughout your working years. Filing correctly ensures you receive what you are entitled to without delay. If you found this helpful, consider sharing it with another senior who might need clarity this tax season. Staying informed together makes the process less intimidating. Take a deep breath, gather your documents, and handle one step at a time. With the right information and a calm approach, you can move through the 2026 tax season confidently and securely.